What's good, YouTube? It's your boy Zay, and welcome back to Setup Sunday. Now, from the title of this video, I'm pretty sure you can see, and this is not no April Fool's joke, but this is going to be the last episode of Setup Sunday. And I know you might be asking why. Why would this be the last episode? And I got to be honest with you guys, and I'm going to have a heart-to-heart real quick before we get into the episode and end it off, because I'm going to end it off with a bang. I'm going to send us out with a bang, but the reason why this is going to be the last episode is because I just got to be honest, and I've talked to a few people about it, but just, doing weekly and monthly updates on, from a technical analysis perspective, it's lost the funness for me, right? And I say the reason why it's lost the funness because I feel like I'm just saying the same thing. It's not like anything new. I really don't see how my channel is progressing. I don't really see how I'm progressing in the knowledge that I'm giving out. I feel like I'm kind of handicapping myself to just being known for one thing when I feel like the things and the situations I've been through, the things that I've learned is giving me a ton of knowledge and I'm able to speak on other topics, right? So I just don't want to be known for one thing. And I got to be honest, the reason why I kind of stuck to that one thing is because when my YouTube channel kind of had it, its uprising, it was due to the technical aspects. So I was kind of nervous or scared to say lose my audience, right? But now that time has passed and I thought about it, it's like, I gotta be honest with myself. I mean, if I lose some people, then so be it. You know what I'm saying? But at the end of the day, I gotta do what makes me happy, what's fun for me. I can still give value the way I know how. And it can still be a fun, enjoyable process for me. I don't want to feel like it's a burden, right? And it almost got to that point to where I was thinking about quitting YouTube. Like I don't want to quit YouTube. I love doing YouTube videos, but it just the baggage that was weighing or that I felt was coming down, I didn't like it. So with that being said, it's spring cleaning. And at the end of the day, I gotta, get rid of the things that ain't making me happy. You know what I'm saying? I want to do things that bring joy to my life, and YouTube is one of those things. But I want to make content that is like I said, brings joy to my life, that I feel is bringing joy to the world and helping other people. So, with that being said, I'm not gonna be as all like get catered towards options, whatever. I'm gonna talk about what the hell is going on in my life. Whether it's you want to see something later. I got a fucking hole in my roof, right? We got to get my roof fixed, you know what I'm saying? So those are the things that I'm gonna be talking about. Life situations, you know what I'm saying? Where back in the day, I'm glad we got an emergency fund so we can fix that shit, you know what I'm saying? So I'm gonna talk about stuff like that, like how should you really be out here, trying to get to it. So with that being said, I'm going to go ahead and stop babbling, but we're going to end it off. Like I said, this is the last episode of Setup Sunday, but moving forward, a few people have asked for like some process videos and all of that. And those are the things that I really want to do because those are the fun stuff. So let's just go ahead. We're going to update you on SPX. We'll talk about our levels, talk about quarter expectations. But as I said, we're bringing this to a wrap. This show, this it. This is the last Setup Sunday. If you want to catch me when it comes to doing technicals and all that, my IG at StockZay. You can, and that's why I'll probably be doing most of my technical analysis updates. But moving forward, I'm changing the whole vibe of my YouTube channel, man. Like I said, I just gotta get back to doing what makes me happy and what I feel brings more value to the people. And there's a lot of things that I know and that I can give back. So with that being said, do not forget to press that like button. Do not forget to press that subscribe button. And special shout out. I don't know if I shouted them out. I think I did, but I'm going to shout out to my guys at Shady Side Up for the shades. I think I did that at the beginning of the video, but I really can't remember. But if I did, if I gave them a double shout out, they deserve it because these shades are fly as shit. Now, let's get into the mother video. All right, family. So here it is, the SPX. It is basically, you could say after the first trading day of April, and we're at 45.45. Now, again, the levels that you see marked here, the support and resistance levels, are levels that we talked about in the 2022 stock projections video that I did before the year even started. All we had was the yearly, well, I presume the yearly open was 47.66, and then we mapped out these levels. So just for a quick recap, let's think about where this first quarter is over. So that's mainly what we're going to talk about, right? So for this first quarter, you can see that for the low, we made a low of 41, or basically 4,114. Now, in the video we did in the beginning of the year, I think I mentioned like a 15% pullback was going to bring us down to 4,051. That's how I got this level. And then we talked about 42.89 being a significant support level. I believe that was about that was our 10% area. And then we also talked about 45.27 being another significant area in previous videos. So far, I mean, from a percentage standpoint, all the numbers been holding up, because I believe if we look, and I'll just double check, but if we go from just this all time, let's just go from the open to 45.27. That should be about a 5%. Yeah, yep. At 45.27, the market's down about 5% for the year. And if we go through the rest, you know, our levels, you can see that from the open to 42.89 was about 10%. And then we hit 15% down here. We didn't do quite that. We did about 14% pullback for the low for the quarter. Now, March, we retested. We didn't break the lows, which is a good thing. And then we also made a new high, right? So we broke this high from February. We made a new high. Now, we did not break the lows, and we made a new high. So far, what this says is going into quarter two, we do have some upside momentum. So, you know, April is typically one of the most if not the most bullish month in the stock market. And right now, a lot of indicators are pointing positively towards us having another bullish month in April. You think about, you also add in the stat of after the first rate hike, the market typically goes up within the next 3, 6 to 12 months. Like, you see a positive return from the stock market within those periods. So we have a lot of things going for us as we go into quarter two, right? Now, there's a couple of risks that I also want to point out as we look at quarter two, right? So the risks are going to be in May and June, these 2 months right here. We're going to get additional rate hikes, right? So the conversation is right now is, are those rate hikes going to be a 0.5 basis point, or are they going to be 0.25, or is there going to be some kind of mixture? And a lot of that depends on inflation data as well as job data. Now, the economy is looking strong. We just recently got some economic data that the unemployment is at 3.6%, and job openings are looking really strong. So from a job perspective, the Fed is, you know, they have a pretty tight labor, and then inflation has definitely hit their goal. So all of that is just saying that, yes, the parameters for them to keep raising rates is in place. The economy is strong. And you know, eventually they need to be fighting inflation. So the way to fight inflation is to raise rates. So as we go into May and June, those are the, you know, and I'm giving you guys an overall perspective of quarter two, is that we need to be careful of the sell in May, go away moniker, right? There's that sell in May, go away. And, you know, that could possibly be happening when we have 2 rate hikes going into May and June. And we need to be paying attention to the GDP data as well as inflation. Is inflation, you know, still going to be roaring hot, or is it starting to peak? That's going to be a big thing to pay attention to over this next quarter. Another thing is we still have the Ukraine and Russia war. So that'll be another thing over this quarter that could be a potential headwind, or things that cause us to go to the downside, or things that you need to pay attention to, right? And then the last thing that upcoming risks in coming quarters that we still have to pay attention to is going to be midterm elections. Now, there are some graphs out there that I want to show. Give me 1 second. So here is the first, and let me zoom in for you. So here's the first historical pattern that I wanted to show you guys that I was talking about. Now, if you can see here, when it comes to an election or midterm year, there's some typical seasonal patterns that like to play out. And this is one of the things that I was speaking about as far as why quarter two, you know, we need to watch out for that sell in May moniker, because basically what happens is that it looks like, and if the trend is kind of still holding, we had a little bit of a pullback here in the beginning of April, and it looks like that we're going to rally through about mid-April going into the end of April going into May. And when you get to May, you have like this sell in May and go away all the way to June into July. And this is why I said those two rate hikes that, you know, that can be used to cause this type of pullback. You know, the market will make any type, you know, they'll find their catalyst they need to make the market move the way they want. So if this is going to continue to follow the traditional pattern, then those 2 rate hikes as well as those other headwinds we talked about is what we could possibly see here, right? And then as we go into the summer, we kind of just go sideways. We make a little bit of a bounce, and then coming back down for September quad witching, and then going into an end of the year type of rally. But what we really just want to focus on is the second quarter here. But wanted to show you this seasonal pattern
And here's another one. This one is from the Almanac, and I'll zoom in on this one as well. So again, you can see we have a nice dip in the beginning of the year. Then we rally through March, right? Then we get a little bit of a pullback to the end of March into April. And then we get another rally where we even make a new higher peak here. And then we have the pullback at the end of April going into May, selling May into June. So you can see there's a pretty big, you know, a drawdown from May to July. And if we have 2 rate hikes, May and June, you know, that could cause that possible drawdown. So those are things, you know, that I'm trying to keep in mind as I look at the market. So let's just go back into the SPX. So let's kind of talk about April. How do we see things? And if we look at those seasonality that we just looked at, that's what really gives me more confidence that yes, we can see possible upside. So what will be the upside we'll be looking for when it comes to the month of April? So let's just take our open of 45.40. You know, we like to do the calculator because we like to be 100% correct here, or try to be. And so the 45.40. Now let's just say April we get a 4% gain, right? The month has a 4% gain. That would be 104 is how we're going to figure that out. So that takes us to 47.21, right? Now we open the year. And if I click here, you can see we open the year at 47.78. That's technically, so in order for the market to be flat on the year, we need to get to 47.78. Now, what would that take for us to get there? Now, if we go up, that basically would be about 5 to 5.3% rally for us to get back even, just for the market to say it's flat, it's not down, we're out of correction territory, all that. So as you can see, a 4 to 5% rally is going to take us from basically 4,700 all the way to the open, which is about 47.66. Now that is going to be my personal, you know, high-end target for this month. I personally don't know if we can make new all-time highs because of all the headwinds and things like that, but I could definitely see us pushing 4,700 from a monthly perspective. Right now, if we break down, right, and I'm gonna keep, and I'll go to a smaller time frame so you guys can see. But when I look at it from a high level, we've already retested this support of 45.27. That's what Monday was. Now, or Friday, I'm sorry, the April 1st. Now, what could possibly happen is next week or this upcoming week, we could, you know, come back and retest a little bit more. But what, you know, the most important thing that we want to, you know, we want to see is that honestly, we can't see, or we don't want to see the SPX break below 4,500. If we break back below 4,500, you know, we could be headed back to 4,400 very easily as another retest. And if we break that, then, you know, it's basically, this was just a pump fake and the downtrend will resume, right? So let's just kind of dig in and look at what that, you know, what that looks like a little bit. So let's look at it from a weekly perspective, right? Now, from a weekly perspective, this looks like a shooting star, right? Evening star. And most people say, hey, that's rejection, and it looks like we are going to pull back. Now, the reason why I'm a little skeptical of this candle is because, yes, this is a weekly candle. Now, one of the things is I want to show you exactly, look where we closed, right? Literally at the top of August 30th weekly. We closed here on October 18th weekly candle closed here, right? 45.44. We have a open right here for December 21st. And then last week we closed there as well. So we did not break last week's close, and that's sign of that's usually a bullish sign. And then again, when you look at it from a monthly perspective, this gives you a little bit of, okay, we ran a little bit too high at the end of March, and so people took some profit, and now April is to resume bullish. So from a weekly standpoint, you could get faked out by this candle, but the way I'm looking at things, I see it a little bit different. Also, if I go down to a daily chart, we had a little bit of a pullback, but then when you come in and you see what happened Friday, we did pull back, but then buyers came in and we pushed the price up. So basically, as we come into this this upcoming week, we need to hold this 45.27. I mean, it's as simple as that. When you break it down even more to a daily perspective, you can see that this was once resistance and it's now has to be support, right? So we got up here twice before and we failed to hold this area, so we fell back down. Looks like we have a little bit of a double bottom right here. And so now, if that is the case, this will be the neck area, and we are now testing this to make sure that this once was what was resistance, right? So resistance here, it was resistance here. We broke through. It was support. It was support. We broke it. It was not support. We came back up. Then it was served as resistance because we broke back down. Resistance, we broke back down. Again, now it was resistance when we were able to break through. And so now it's 45.27, a level that we talked about in the beginning of the year. Will that be support? And if that is the case, it most likely feels like the likely area where we would bounce to would be 4,700 to this 47.66 where we opened up, right? I can easily change it. I can change it to a line graph, and you can see even more clear that when we bounce from here, we typically go to this next area and we find resistance. There are a lot of rejections in this area. And what does that area happen to be? 4,700. So for quarter two, right, just to recap and not to drag this out, for quarter two, I am looking at a max or a high of 4,700. We could break out and make new all-time highs. I'm not saying that isn't a possibility, but what I am saying is that based on these historical trends, I could possibly see the market going to 4,700. When we get to 4,700, it will be very key to think about what are the catalysts or what are the things being said in the news, because we've now had a pretty big rally off of the floor of 4,200, and we could be stuck in a bit of a trading zone here. So if we get to that 4,700, watch for us to pull back to, again, what was once resistance will now be support. So this area right here will now, and I'll even add in a level just so that way you can mark my words. This will probably be the area that if we go to 4,700 or above, we'll probably pull back to test to see if this is a support area, which happens to be 4,600. And so you could see us in quarter two basically trade as high as 4,700. And then we could see a retrace. Now let's add this scenario in, right? So this is a setup scenario, so we can go all the way in. Now, let's say the max that we do hit is going to be our 4,700 or 4,716, right? This is the highest we go. So we get a bounce. Right? So we get a bounce into that end of mid-April area, right? So let's go back to our graph. So this is where we're at. We're at a dip here. And if I go back to the line, I can even show you guys. So this is where we're at. This is the beginning of April. We're in this dip. So we got this big rally, right? So you got your big rally, right? And then we got a dip. And now we're supposed to rally again into about mid-April, or say, let's say this is about April OPEX, right? So we go back, so then we bounce into April OPEX. And then what happens, right? We know we talked about the 2 rate hikes in May and June. And if we go back to our historical trend, you can see that this is a pretty substantial drop. We go from pretty much being even to about a, say, 6 to 8% drop. Now let's take what we know into perspective, right? So for every 1% that the Fed targets, that equals 10% of equity exposure or downside equity exposure. So if they want to raise the Fed rates by 1%, then that means that basically accounts for like 10% of equities, right? So if they do 250-point bases in May and June, right, or even one, or let's say there's speculation, people are nervous that that's what we're going to get 250-point bases raises. That could result in, say, another 10% correction for the overall market, right? And what would that look like? Well, if we get to 47.16 and we have another 10% drawdown, then we're talking about possibly coming and revisiting as low as 42.45. So again, that 4,200 support level is going to be very, very, very critical. And if we go back to the candles, just so you can see, what I really want to point out is how ironic is that if we get to 4,700, that 10% pullback would bring us right in this area where I feel like we possibly have to come fill this gap, right? Now that we rallied to, this was, that week of quad witching, and, we did gap up, we came back and we hit it with a wick, but some people would consider this still a gap because there's, the price didn't completely have a what do you call it? Like a open and a close right together, right? So there's still that price gap there. But I just wanted to point out that scenario of we get our rally and then you get your sell in May, and literally how does this, this trend kind of maps out to map match exactly what we're seeing here, right? So if we do get that 10%, say, drop in June into July, then where does that leave us as far as that trading range come, say, July into August and September, right? So if we kind of bottom out and we do, say, go down and we retest, well, where do we bounce back to? Well, it looks like more than likely this is going to be that trading range that we're going to stay in. It'd be somewhere around this 42.89, which is about roughly 10% from the open of 2022 to about 4,600, which is that kind of high point where we're right at before that bullish breakout. So that could be the trading zone that we can have in Q3, where if we're down here and we come retest that, okay, come June, July, we're just going to bounce back to that 45, 27, 46 area into August. And then we may even have one more kind of retrace to maybe even 4,400 or somewhere in this area around September for quad witching. And then ultimately, and if you watch that video, like I said, my end of the year target was 52.42. So if you're thinking about it from September, if we can just kind of maintain somewhere in 4,400 to 4,500, and we do get that nice third or fourth quarter bounce from, say, October, November, December. Right now, there's a prediction out there that we could see probably a 15 to 20% bounce in the fourth quarter. So let's just, again, for example purposes, if we're at 4,400 and we do a 15 or 14, let's do 15%, that puts you at 5,073. And if we get the 20% bounce, look at that, it puts you at 52.97, roughly basically what my end of the year target was, which is 52.42, right? Now, same scenario, if we are at 4,500, then of course it's even a little bit better, right? If we manage to be somewhere around September or get out of September quad witching around 4,500, and we get a nice 14, 15% bounce. 15% takes us right to, what is that? 51.77. So right under 5,200, and then 20% would take us to an end of the year target of roughly about 5,400. So I kind of just ran you guys all the way through my, quarter two, as well as look ahead into quarter three and quarter four based on historical trends. Like I said, this is the last episode, so I really wanted to go in and give you guys kind of just what I see for the rest of the year. If I break it down, and this is a quarterly chart right here, right? So I'll put it on the 3 months. So I can now see that, okay, so the first quarter of 22 was a negative 4.95%. That was the first quarter. And what does this look like? It does look, from a quarterly, this looks like a hanging man. So is it very possible that in quarter two, right, we kind of, like we said, we push up and we push to this 4,600, 4,700 area. And if you see it from this perspective, you even can see that, okay, if we get here and we start to struggle or get rejection, we have not made new all-time highs. And so therefore, coming into that May and June, where we get those rate hikes, we will be susceptible to the pullback. So do we see the market push up early May, right? Because you got to think about it. Early April, the candle or the line that I had will represent April, May, and June. So we push up that first month, and then do the next 2 months, we see a little bit of a pullback, and we end up coming back to 4,500 or say 4,400, creating what essentially looks like this. Do we create a candle or a quarterly candle that looks essentially like this? Literally, where we have this wick here, it pushed up and it came back, and we literally had a flat quarter. We had a flat quarter where the market did not do much. Now, throughout that quarter, you had a good run and you had a pullback. So it looks like, okay, well, this quarter was, it was flat, but there was a lot of price action and volatility. So we could see the same thing happen where we push up. When we in those last 2 months, we come down, and then what does that lead us to, right? That leads us to possibly the beginning of that third quarter, where we even have a little bit more of a drawdown, and we come retest some of these areas down here around that July and August, right? Remember how we said we might be trading, between 4,200 and 4,500. So basically, we can see from a quarterly perspective that, hey, this could be that area that come quarter three and quarter four, we possibly could be traded in. And then ultimately we would want to see by this October 22, which will bring us to the December, we should be making a new all-time high, because by the end of December, we want to be making new all-time highs pushing 5,000. So when we get to this January 23 first quarter, we might be somewhere up here, getting ready for another type of pullback. So hopefully, breaking this down, walking through all that was pretty dope. Like I said, I hope you guys enjoyed this series. Listen, before I close it out, I do want to say that there are a ton of resources that do weekly, daily shows that go through technical levels every day and present updates. Like I said, for me, it's just kind of, I lost the funness in it, but there are plenty of people that will be giving out daily levels. And as I say, if you really want to get it, I'll be on IG still pumping this type of stuff out. But again, man, I hate to bring this, it was fun while it lasted, but all good things must come to an end. I appreciate you guys for watching this video. Hopefully I gave you some value. And without further ado, peace out. Stay blessed.